Yo, what is going on, fam? Hope everyone is well. Welcome back to Masterclass Day 6. The days are rolling by. I hope you guys are having a beautiful day, night, whatever the case may be, whenever you're watching this. For today's lesson, we are going to be covering profit taking profits, how to understand where to take profits on the charts at the best point possible to make sure that you realistically never let a green trade go red. So just wanted to hop on, do a quick lesson, go over some gems, spill some quick sauce for you guys, so you guys can best understand where exactly you should start taking profits or start to look to actually exit your position or exit a chunk of your position and then leave profit. So let's go ahead and hop right on into it. Per usual, if you guys haven't checked out previous masterclass lessons, go and check out all of those. They're all complete gems, complete bangers. So let's go ahead and hop on the charts and get started. Boom, boom, boom. Okay, cool. Let me get rid of this. Okay, cool. So the biggest thing when taking profits that you guys need to understand is, obviously you guys probably see me, catching a lot of these 100, 200, 300, 400, 500% trades. And, you're probably confused because you're like, where do I take profits? Where do I hold my position to? But for a lot of these 100% plus trades, when I do catch those, I'm catching them with a very small position left, or a small percentage of my position left, right? Meaning that I only have about, runners, or I only have about a quarter of my position left running to get that extra percentage, due to the fact that I am always, you guys know me and I always mention this, I'm always taking profits as my position continues to move in my direction, right? I'm always locking in those profits because I want to make sure that the market never takes those profits away from me. And regardless of how strong the setup may look or how good price action may look, I want to always make sure that I am securing profits at that 20% mark, and then 40 to 50% mark, and then leave a percentage of my position to continue to run in my direction if it obviously does continue. But I and you guys, most importantly, need to keep in mind that the market isn't always going to move in one direction. Especially as day traders, and most importantly options traders, we need to be pretty quick with our positions. We need to be pretty quick with understanding where to enter, understanding where to take profit, and understanding where to exit. Obviously, you can hold your position for a good amount of time, but in terms of getting that initial entry or getting that initial main exit for your position, you always want to make sure you're entering and exiting at the same place. And what you can do to best understand that, to enter and exit at the same place, is you need to be entering and exiting at pretty much key levels, key areas, such as supply and demand zones, fair value gaps, order blocks, support and resistance areas, like things like that are going to provide price with a significant move to the upside, right? Obviously, due to the fact that when we have our key levels, we understand that those key levels are likely to provide us with a potential reversal. So we want to make sure that we are A, entering at that potential reversal, and also B, exiting at that potential reversal. Because A, we want to make sure we're entering before we actually get the initial move. And B, we want to make sure that we are exiting before price reverses in the opposite direction towards us and the market starts to take away profits from us. So that's why it's very important to always understand key levels, key areas on the charts, and always have them marked out, because those areas help you understand where the best entry or where the best exit for your position can be before price does move against you, right? So for example, let's say that you guys can see that we have this demand area right here, right? You see that we have strong demand, a strong area of buying interest. Now, let's say that we were to enter this, and we would enter into this demand zone, right? And we were to take calls on this position. So I'll run you guys through exactly what I would do for this position. So obviously, let's just say our previous highs would pretty much be right here. So what I want to do most importantly is I always want to look at the previous highs from where we bounced into that demand. Or let's say we were trading in supply, I always want to look for the previous lows to target. Now, in this case scenario, since we're trading with demand, we want to look at the previous highs, which would be either this level right here, or it could be this level right here. So if you want to put your, target up a little bit higher, you can target the previous highs. Now, what do we also see here? We see an area of resistance being created, which is also a key level, also an area that's likely to provide us with a potential reversal, right? What do we also see right here? We see a bearish fair value gap. So we can mark these areas out as exit areas for our position. Now, when I say exit area, I don't mean completely get out. Yes, you can completely get out your whole position all at that point. But when I say exit areas, I mean that's where you start to take your trims, start to lock in profits, start to take your heavy trims, so you can make sure that you lock in those profits regardless and not let the trade go against you. So in this case scenario, let's say that we entered inside here. Now, obviously, our stop loss for this would be below these lows, would be below this demand. So we can mark it like that. And then we would want to target this main previous high. Or if you want to go a little bit crazier, you can target this supply up here, which we have charted out. So let's go ahead and chart out that supply, right? Because typically I'm going for trades like these, a little bit of these bigger trades. So I want to kind of run you guys through how I would catch them. So we obviously enter, we catch this initial move to the upside, right? On this initial move, on this initial push, you guys can start to see that obviously the trade is moving in our direction, meaning profits are starting to come in. Now at this point, once profits start to come in, you can see we're probably at this 20 to 30% mark right here. Now at that 20 to 30% mark, I am always trimming, always taking my first trims just to be safe. That's just something that I do in my trading plan. Whenever I see about 20% profits around that area, I take my first trim. Now, depending on how strong or how solid the setup is looking, that trim will decide on how heavy that trim actually is. Like price action will decide on how heavy my trim actually is. So let's say that price action is continuing to move nicely in my direction, then I'll take a light trim just to lock in profits and be safe, right? But let's say price action isn't moving isn't moving the best, but it still, hit that 20% mark, then I'll take a heavy trim. I'll take a heavy trim because I know price action isn't moving the best. So let me lock in profits just in case price action does continue not moving the best. Because if it does continue not moving the best, it's obviously going to move against me and stop me out, which is not something that I want. Now, you can see the target that we had here, which was this bearish fair value gap / this resistance area, got perfectly tapped into and broke into. Now, at this point, regardless of how well we're breaking our levels, I'm still obviously going to take profit. So at this point, we have about 40 to 50%. Now you can still see buyers look incredible. Let me move this. You can see buyers look incredibly in control and buyers look still very strong, right? So what I'm going to do is obviously I see my target being hit. I'm going to take another trim at 40 to 50%. Now at this point, since this is my second trim, I realistically have only about a quarter of my position left or runners. So now that I have 40 to 50%, that's perfect with me. That's a perfect trade. That's a perfect move already that I got to the upside. So I'm satisfied. So I'm not going to be extremely cocky, or not cocky. I'm not going to be extremely, greedy. I'm not going to be extremely greedy and just let my full position continue to the moon. So I'm only going to leave my runners continuing to move in my direction if it obviously does move in my direction. And if it doesn't move in our direction, it doesn't matter because we only have a small piece of our position left. We only have runners left. So let's say those runners turn red or those runners go to break even. It doesn't affect us as much because we already took 2 trims and locked in profits. But let's say we didn't take those 2 trims and didn't lock in those profits. If that position flipped on us, we would just exit at break even or exit at a loss. But since we did take those 2 trims, it saved us. It provided us with more of a breathing space for our position and provided us with more room to let our position move because we already locked in those profits, right? So obviously, This was our key level here. Now that we have this key level that got broken through, simply what I'll do is I'll just target the next main supply area or the next main key level. So in this case scenario, you can see it's this, what is this, 514 supply area that I had marked out. So you can see it tapped into this 5-minute supply zone here and then rejected. And then you can see that's exactly where we put our final take profit. Why did we put our final take profit there? Due to the fact that that is an area that's likely to provide price with a reversal. So we want to make sure that we are exiting before the reversal to get the most profits possible within that position. In that reversal area is, like I mentioned, key levels that we want to utilize. And this supply area is a key level. So that's going to be that. And then, vice versa, if you're entering to the downside, you want to just simply look for key levels to the downside, like bullish fair value gaps, demand zones, order blocks, stuff like that. You can see if you were to enter off this supply zone, you could target these previous lows. Like for the demand zone, we would target the previous highs. But now that we're trading with the supply zone, we would target the previous lows. So it would be the same exact thing. You can see we have a strong support level being created right here, right at this resistance that we had previously. But this was resistance, then turned into support. So we had this strong support level being created. Now that's pretty much an area that you would want to target for your take profit. So let's say that you enter these shorts, price continues moving beautifully to the downside, and it hits your target. Obviously, this would be your second trim because at this point, this would be about like a 60-70% move. So at this point, if I were to enter off this supply zone, I take my first trim about right here at about that 20% mark, like I told you guys. And then our main target would be right here all the way at these strong previous lows that we had. You can see these strong previous lows. So that would be that. And then obviously, let's say that you take your second trim here and then you leave runners to continue moving to the downside. But obviously, it didn't continue moving to the downside and it reversed back to the upside. Now that doesn't matter because you only have runners. You only have a small piece of your position left. So if that small piece of your position reverses on you, which it did, it's not going to affect you as much as if you had your full position. So that's why taking profits, trimming is always very important. And also understanding where to take profits and where to trim is very important as well. So the biggest thing is just simply looking to trim, looking to exit at key levels, at areas where price is likely to provide you with a reversal. It's very, very simple. You obviously want to exit before the reversal so you can get the most profits possible. And you also want to enter before the reversal so you can catch the whole move. You can catch the initial move. So that would be that, simply just trading, entering / exiting with those key levels. That's going to be that, family. Quick little lesson. Hope you guys found value from it. If you ever have any questions, feel free to DM me or at me in the Discord. Other than that, I'll see you guys in the next lesson. Much love.